Okay, great. This is the third lecture on capital allowances. This is what the pro forma looks like. So, as you practice, you'll start learning how to lay out your table. And you might have, from experience, already maybe done a few of these pools. But like I mentioned earlier on, we have the main pool, we have the special rate pool, we have this asset that we've elected to be a short life asset because we intend on getting rid of it in less than 8 years. And then we have the private use asset, so where the owner is using assets for his own personal use. And again, this tax written down value is very much like what we refer to as your net book value. So this is you might be dealing with a business that's been running for quite a while, and so you will be given these figures. If you're not, then that's the first time you're actually getting the asset, so you won't have a tax written down value for something that's just new. And like I said earlier on, you can see that most things should fall into this main pool. So we have second-hand cars in there, and we have cars between in the 76 to 130 kilogram sort of range. And any cars over that will go into the special rate pool. And cars with private use, you can see them sitting there nicely in the private use asset. If you had any short life assets, well, then they would just as well go in there, and you would write them in as you go along, depending on what it is you're given in the exam. Now, I'm going to talk very quickly about what's referred to as the annual investment allowance in a second, but I just want to show you where it goes. You can see that's sort of dealt with over here. So they're sort of telling you that, okay, all the little things that you can work with, all the things that aren't, all the quirks I'm going to talk about kind of happen in this sort of initial column before the main pool. And technically what's left goes into the main pool. So you can see here it says transfer balance to the main pool. So they're saying that you have this maximum 2,000 free of charge. So think of it as, like, let me just go to the next slide very quickly. So the government say, you know what we're going to give you? We'll give you 200,000 anyway. You can have that, use it for whatever you like. So you buy something for £10,000, you've got 200,000. You know, so you can use the whole 10,000 is allowable. You only have 190,000 left for that 12-month period. So you don't have to start just doing 18% of this. They're allowing you the whole thing. So this is really to encourage larger capital expenses by businesses. So the government allow this 12,000. Now this 12,000 again, as the written down allowance, are prorated. So if you have anything shorter than a 12-month period, you have to find the equivalent number of months and use that. So you can't. The 200,000 isn't automatic. It depends on the number of periods. It depends on the number of months that you have. Now, this is fine, except, as you can imagine, the cars don't enjoy this benefit of 200,000. So again, you can see what they're really saying here is that the special rate pool only enjoys 8%. So really what you want to do, if you buy your assets, is that you want to try and put your special rate pool assets through this 200 so you can get most of that capital allowance as opposed to only getting 8%. At least with the main pool, you'll get 18%. So the order of priority is the special rates pool to get as much as you can, then your main pool, and of course your short life assets you hope to sell anyway soon, so you hope to realize some kind of balancing allowance, and then finally your private use assets, because that's still going to get cut down by the percentage of business use on whatever capital allowance you calculate. The other quirk is that this is not available in the final accounting period. So nothing, written down allowances and nothing is available in the final accounting period. So when you see final accounting period, if you buy some stuff, well, you bought some stuff. And then at the end of that period, you dispose. So you don't work out any no 18%, nothing is calculated in the final year period. We just do the final year period to work out to see if there are any balancing charges, balancing allowances. Right. So going back now to this here, you can see here that where I have, so for example, let's just say you bought a machine worth 500,000. So you bought a machine worth 500,000. What they're saying is, well, 200,000 of that can be used towards your annual investment allowance, and you put that there. You can see allowances, but you have 300,000 left that you can't use because you only had max of 200,000. So this 300,000 will just be transferred to the main pool, and that 300,000 will then enjoy, when added up with the other things in the main pool, the 18% allowance that you have. So that's how it works. Anything over 200,000 gets transferred into the main pool, and then you can, well, of course, into whatever pool it should be in, and then you do the calculations as you need to. So this example is an interesting one. They're talking about a special rate pool. So this is where you have a special rate pool, and I guess, like I said earlier on, you want to use the special rate pool against the 200,000, and then you transfer the balance to the special rate pool. If you just have plant and machinery, use the 200,000, then transfer the balance into the main pool. And then what you can see here again is this, what I was saying earlier on. If you buy the new car, low emission, under 75 grams, you're allowed this first year allowance at 100%, and then you can transfer that, and that becomes an allowance. And again, all this is us just working out our figures and just multiplying them by the respective figures of allowance that are allowed, 18% and 8% there. So really, this is very much a case of us practicing. You can see here what they're saying is, of course, you can get the potential to do your balancing charge and balancing allowance only on the short life asset. And here you can see here the business use is all you're allowed to put through. So you do your normal 18% or whatever it is, and then you would work out just the business usage. And then you see your allowance kind of has a schedule of all the different allowances from all the different parts. Just going back up again, just looking at the disposal, this is really important. When you dispose of an asset, this happens after you've added everything in, and it says you dispose at the lower of original cost and the sale proceeds. So if you bought something for £10,000 and whatever you've been doing the 18% and 18%, and then you sell it, you probably will not sell it for not very much, and that's usually the process. So whatever, it's typically the sale proceeds that are, if you like, deducted most of the time. If you have an odd case where suddenly you have an interesting original cost or whatever, then you look at it differently. But typically the sale proceeds is what's deducted, and when we see some examples, we'll see what's going on over there. Again, like I said, the writing down allowance, it's 18% reducing balance, 8% for the special rate pool. We apply pro rata. Again, this is my very last slide. Whenever at the end, if you notice that there's only £1,000 left, you just write off the whole thing for a 12-month period, right? You write off the whole thing for a 12-month period. Of course, this is restricted where you have private use by a proprietor, by the owner. So this is always a little quirk. Sometimes you see this in little Section A questions where you see that the written down allowance is, say, 950, and don't be tempted to start in the main pool. So don't be tempted to start doing 18% of this. Just take the whole 950 as a capital allowance in that period. First year allowances are always 100%. This is for your low emission cars, your new low emission cars. Always 100%. Doesn't matter when you buy it in the year. Doesn't matter when you buy it. And I've talked about cars already. Yes, I've talked about cars already and where they're going. Sorry, forgive me. I've been saying 8 years. The useful life is less than 9 years. So it's not 8 years, it's less than 9 years. So when I had 8 years in my head, useful life when it's less than 9 years. If the asset, I think this is where I've got confused with 8 years. If the asset is not sold within 8 years, you need to transfer it back to the main pool. So because the whole idea is that the reason why we created a short life sort of structure is because you felt that, well, you were going to sell it in that period within 8 years. Again, private use, no problem, just carry on as normal. The only thing, again, is that it's restricted to business use. Companies don't even have this problem, but that's the kind of situation. Now, again, what you have is, if you have a situation where you bought an asset for 10,000, you'll be doing written down allowances for a number of years. Let's just imagine the written down allowance for the 3 years have been 1,000, 1,000, 1,000. So the final written down allowance is 7,000, and you dispose of this thing for 5,000. Well, it's because the argument is you haven't benefited enough that you should have received more of the depreciation charge, so to speak. So you're allowed a balancing allowance of a further 2,000. But if you ended up selling it for, say, 9,000, well, it means that you have depreciated it too much and you've enjoyed too much of a capital allowance. So therefore, you will have a balancing charge of 2,000. So this will reduce your capital allowances available, while this one here would increase your capital allowances available. I mean, I've highlighted this before. We never have balancing allowances on main pools until the business ends. Again, like I said, at the end of life, nothing. No AIAs, FYAs, WDAs. We just work out on disposal what's left, and then work out what the closing scenario is. This is I've talked about this final quirk. Important again, always watch out for the £1,000. And we just write off the whole thousand, we just write off the whole amount if it's less than 1,000 as a balancing allowance in that year, or as a, well, not balancing allowance, as a capital allowance in that period. Okay, right, great stuff. So those are my 3 videos. This has quite been theory. This has been all theory. It's now really about you going in to play with a few questions and applying the theory as you're going along. And in class, what we'll do as well is, because you've looked and listened to the theory, now we'll be able to work through questions and find out and try and investigate and see a few more quirks as they crop up. Okay, great stuff. See you on Friday.